Hello and welcome to Morning Markets. Today we're going to talk about sterling and the implications for interest rates and the UK stock market. Overnight, comments from Bank of England Governor Andrew Bailey have led to expectations of more aggressive interest rate cuts and caused sterling to weaken. But the bigger picture over the last couple of years has been one of sterling's strength. So, how did we get here and what are the implications for the UK stock market and for interest rates? Over the last couple of years, the UK has gone from being an underperformer relative to the rest of the world to, in some senses, an outperformer. For example, UK real household income growth has gone from negative to positive. We've seen a period of transition from a period of political instability to some kind of political stability, and we've seen relative fiscal restraint. So they have all been supportive factors for the currency. Of course, the counterpart of sterling strength has been dollar weakness. If we take a step back a couple of years ago, the Federal Reserve in the United States was quite aggressive in raising interest rates, and that led to dollar strength. But recently, the Federal Reserve's concerns have shifted from worrying about inflation to concerns about a gradual deterioration in the labour market, and that's caused the dollar to weaken against sterling. In particular, the bold half a percentage point cut in interest rates in September caused the dollar to weaken. In addition, longer-term measures of fair value had suggested that sterling was undervalued a couple of years ago. Having appreciated over the last 2 years, sterling is now closer to fair value. So what are the implications for the UK stock market? With about 80% of revenues for the companies in the FTSE 100 generated overseas, the period of sterling weakness that we saw a couple of years ago translated into boosting overseas earnings in sterling terms. However, overseas investors tend not to hedge their currency exposure, so they certainly appreciate a period of currency stability or appreciation. In addition, domestically focused companies in the mid-cap market, the FTSE 250, certainly appreciate sterling stability or strength. Another support for the UK stock market from a stronger currency comes from the downward impact on inflation and the scope it offers the Bank of England to cut interest rates. Looking ahead, we expect currency stability to allow the Bank of England to cut interest rates further and support the UK stock market. Thank you for listening.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value and you may get back less than you invest.